Hey, welcome back to The Dive. Joining us today on the show is Curt Marvis from QYOU Media. But first, if you could go ahead and tap that subscribe button for me, that would be great. Hey Curt, welcome back to The Dive.
Hey Cassandra, how are you? Nice to see you again.
I'm doing good. Thank you. It's nice to see you too.
You've got a much more interesting background than I have, so apologies for my boring background today.
Yeah, mine's pretty bright. All right, let's get started here. So since the last time we spoke, you have announced 8 new major partnerships in only 2 months. How are you connecting with these partners, and what is it that's driving them to want to collaborate with QYOU?
Well, a couple of things. One is we've had a pretty spectacular rise in our ratings in 2021. We were getting excited 6 months ago when we were reaching a level of what they call GRP, which stands for gross rating points. Gross rating points is the measurement in India for television that most people in North America would know about Nielsen ratings. So they're the Nielsen ratings of India. And we were getting excited when we got up 1, 2, 3, 4 GRP or gross rating points, because that was starting to get us to catch up to some of the other youth brands in India, like MTV and Zoom and Bindos and some other ones. Bindos is owned by Disney, so it's a Disney brand there. So we were getting excited about that because they were all at like 7, 8, 9, 10. So we were starting to creep up on them and getting all excited. We did a couple of new distribution deals, which put us into what in India are called tier 2 and tier 3 cities. So these are not the major urban populations of India. They're still big because India's got so many people. So a tier 2 or tier 3 city might still have millions of people in it, but it's not, the 30 million or 20 million sizes of the Mumbais and Delhis of India. And there's also rural India, which is all the smaller towns and villages and things that comprise, a huge part of the population there. And so we spent a long time focused on programming and on scheduling that we thought that would particularly work with tier 2, tier 3 India and rural India. And we started to launch shows. We looked at the data, et cetera. And, look, to be honest, the results have been even vastly more spectacular than we could have imagined. We were hoping that when we added some new distribution into that part of India, that we might shoot up and get to 15, or if it was like amazingly successful, even 20 GRP. From where we were, our peak had been 4.4. Okay. Last week we were 46 GRP, and the week before that we were 51, I think. We've averaged 46, not 4.6. So we went from 4.4 to an average of 46 over the last 2 months. 10x. That's insane. That we are now competing. We're bumping up against now not the largest youth-oriented brands. We're now bumping up against some of the largest channel brands in India. Believe me, they're aware of us. We've already been feeling the pressure of them going like, who are these guys? So that's been incredible. Well, what happens? I sort of talk a lot about what I call our corporate meme, which is ratings equal revenue. And so ratings have a direct correlation. It's not a one-to-one, but ratings have a direct correlation into advertisers wanting to use, and advertise on your brand. So when we were at 4.4 and we had, maybe 7 or 8 million people a week that were watching the channel, last week we had almost 100 million people watching the channel. It's a massive difference. And if you're a Pepsi or an Amazon or a Unilever or a Procter and Gamble or whoever, you might be able to be talked into advertising when you've got 6 or 7 million, if it's the right audience. When you go up to 100 million, there's no discussion about whether or not they want to advertise there. The discussion is how much you're negotiating rates at that point. And so what's happened as a result of this meteoric rise in ratings, the results of this, incredible power that we've shown in terms of the programming that have been driven into kind of these new areas and the advertising interest, we literally have brought on, 8+ blue chip advertisers in the last 2 months. It's been amazing.
Wow, congratulations. So how sustainable are these numbers with the BARC ratings?
Well, it's a great question. And the truthful answer is that there's no way of really truly knowing that. With that said, um, we have it's been, I think, 9 weeks now, 9 weeks straight that we've averaged 46, averaged, okay? Gone a little lower at times, we've gone higher at times, but our average is 46. Well, 9 weeks starts to get into a sampling size where you can say, okay, if things really start to suck and we go down, we might drop to 35 or 30 or something if it's horrible. But we look at it, we're positive thinkers. We look at it and go, how literally right now, we have calls on a daily basis and we call it Project 75. Project 75 is how do we get to 75 GRP? And so we've got everything, all the different teams working together, doing analysis, looking at the programming, looking at shows, looking how we're going to market it, looking at every aspect of the business. There's no guarantee that Project 75 will be successful, but that's where we're going right now. That's what we're looking for. And so it's a very, very different mindset in every aspect of the business than it was 3 months ago, much less a year ago.
All right, great. So on June 1st, you announced the acquisition of Chatterbox. What can you tell us about this acquisition and the synergies this creates with the current platform?
Well, on a macro level, everything that we do as a company is based on kind of two fundamental macro themes, I'll call it. The first one is that short form, or what I call social video would be what's started on YouTube really, but is now on every platform like Facebook, Instagram, TikTok, Snap, etc. Why do I call it social video? It's because it's video that's interacted with in some way, shape, or form, where you're passing it on to a friend, you're creating it yourself, you're chatting with your community and followers about it. I mean, I would argue that the video that Deep Dive puts up on YouTube is a perfect example of I'll get to that in a second, influencer driven financial social video. It's meant to have people do more than just watch it. They want to comment on it. They want to tell their friend that you should watch this, etc. So that's one thing, the social video macro theme. And that's exploding everywhere. I mean, we know that, Snap, a company that people that thought was struggling when it went public, is worth $100 billion today. The value of Instagram, the value of Facebook, the value of YouTube, these things are unassailable, and the viewership of it is part of the fabric of everyone's lives everywhere in the world, but especially younger audiences. That's one theme. Second theme is that influencers are driving this, what we call influencers. What's an influencer? An influencer is you. You have followings on your social media, your opinions, what you talk about, things that products, whatever it might be, you're influencing someone to make a purchase of that product. And so social video is basically influencer driven. And we believe e-commerce and the economy that's building right now of what we call the creator economy is influencer driven. Everything we do is a confluence of those two macro themes. Chatterbox is a specialist in influencer marketing. They represent influencers. They have a database of 300,000 influencers in India. They have a massive number of blue chip clients that they're doing projects for. And so we were trying to build that internally. And if we had done a great job, we might have gotten to where they are right now in 2 years. I look at our acquisition of Chatterbox as accelerating our influencer marketing part of what we were building in India by at least 2 years, maybe more than that. In addition, they've got an amazing management team that was just here in Los Angeles meeting with us. And so the fact that we've got this really fast growing loudspeaker channel and with content from these people and this influencer driven company that's part of it now is why we're just, super excited about what the future holds.
Yeah, awesome. Okay, so the company is still yet to reach profitability. Is that a focus right now, or is the focus primarily on growing the audience?
Well, I mean, it's interesting. I had a budget meeting this morning with all of our teams, and that topic obviously came up. When are we going to be cash flow break even? I think the reality is that we feel I was hoping we were going to be cash flow break even by the end of this quarter, but we kind of backed off on that really because we're investing in the business right now. You've got to chase some of these things. You just can't go and sit there and, like you just said, how do you make sure 46 GRP stays there? Well, you just can't walk away and go, okay, work's over with. You've got to keep building it. And as I also said, we're trying to figure out how to build it to 75. Whether we get there or not, who knows? But the point is you've got to make investments to be able to do that. the conversation this morning is that we believe that in Q4, based on our revenue projections, et cetera, on an operating basis, we could be at cash flow break even as a business. Question is if that's true, what are we going to invest back into the company to continue to grow the company and build the business at the level we want, which we haven't made those decisions yet. So I think my specific answer to your question would be revenue growth, ratings growth, and audience growth are the number one priority in the company right now, because we know that's where we build a brand. And if we build a leading brand, then the valuation metrics go off the charts for shareholders and investors. So that's really what we're focused on, but we're always looking at the bottom line. And currently we don't have any plans to raise more capital to achieve the goals we're trying to get to.
Mm-hmm. And you recently brought on some notable investors like the Times Group. Has the company seen increased demand from institutional investors?
You know, that's an area that we're really looking and focusing on the second half of this year. Scott Patterson, our chairman, who you've interviewed, is out here as well in Los Angeles at the moment. And don't tell the Canadian authorities. So he's here in LA, and we have a definite plan to push institutional investment in the second half of the year. We think, frankly, that look, it's taken us a long time to get here, and investors got very frustrated for a time. I mean, Steve certainly didn't believe what I was telling him for quite some time, but we stuck to it, and we're in a position now where what we hoped was going to happen maybe 3 years ago is happening today, and happening, I would argue, at a pace and level faster than we could have ever anticipated. So we think we've got the stability in the business, the growth trajectory in the business to drive institutional investment. And we also think when that happens, we'll start to see appreciation of the stock price.
Okay, so last question I have for you, Curt. What metrics or milestones should investors be watching out for over the second half of the year?
Well, I think, we put out revenue guidance. So I think obviously people should watch and see if we, meet those projections, and those will be an important indicator of the fact that we're on a path and on a course. I've talked a lot about how revenue trails all of this. You don't get a 46 GRP rating and then the next day you book $1 million of business. Doesn't work that way. There's probably a 90-day lag, about a 1/4 lag. So the revenue that we're seeing today is really a result of what happened in calendar Q1. The revenue we'll see in Q3 is really a result of what's happening today, et cetera, et cetera. With that said, we did put out some revenue guidance, and I think investors should watch that. The other thing they should watch is they should look at all the aspects of our business, which we'll be making announcements about. What's happening with advertisers and brands that are coming on board, what's happening with our programming and our content announcements about shows that are coming on, which drives all of this at the end of the day, and what's happening with our ratings and distribution and how is that growing. So if people keep an eye on that, I think they'll have a pretty good indicator of where we're headed.
All right, great. Well, thank you so much for joining us on the show today, Curt.
My pleasure. It's good to see you.
To our viewers at home, thanks so much for watching, and let me know in the comments below what you learned from this video. I'll see you tomorrow.